Welcome back to Venture Capital TV from La Token. I'm the host and moderator of the show today, Sunny Mohanty. And today's topic is about startup advisors. So yes, we all know about advisory roles in funds, in startups. So today we're going to discuss the role of an advisor in a fund, in a startup, in a company, what kind of sort of significance they hold in a company. So let's have a round of applause and introduction of the speakers of the panel today. Okay. Hi, all. How are you? Kingsley, Tobias, Tushar, Dr. Marain. A warm welcome to all of you on VCTV. It's been a while since I spoke on VCTV. I sort of chatted with you on VCTV, but I'm so glad and happy to be back. I don't see Vandana was here, but anyways, I'll just wait for her to come back. So the format of the show is for the new ones, for the ones who've joined us for the first time, Tobias, is like I'll be going through like you introducing yourself and your company. What do you do? I'll be obviously, asking the same question to all our speakers. Then we start discussing about the topic, which is why are the startup advisors important in any company? Okay. All right.
Awesome.
Can we start with you, Tobias? Like your introduction, what do you do, which company you represent, and how are you involved in funding investments and startups?
Absolutely, it's a pleasure to be here, Sunny. Thanks so much for having me. I give you a bit of a background. So we have been investing in blockchain-based companies and also non-blockchain-based companies since the last couple of years, and then predominantly over the last 2.5 years, we invested in 50 plus companies on 6 different continents, and we just recently sort of are in the process of launching our another fund, which is a $75 million early stage fund for a very similar investment strategy. We recently had a bunch of breakout companies such as Splinterlands, which is now the biggest blockchain game in the industry, and we backed them at a pre-seed stage. Luna Crush is similar. So yeah, I'm a big believer in the space, and I think what kind of makes us a bit unique in that space, and was also pretty relevant to the topic today, is sort of how hands-on we work with our companies, right? So we help them find advisory boards, we help them drive revenue, we help them with essentially on 3 different areas, which is strategy, business development, and fundraising. So we have typically weekly discussions with our companies and even like daily ad hoc chats to really stay engaged and help them with all the challenges they have. And I do represent Blockchain Founders Fund, which is essentially an early stage VC based out of Singapore. And we also have an office in Vancouver and try to cover the whole world essentially on various different industries.
Fantastic. Thank you, Tobias, for joining us today on the show. And I'm sure your insights are going to be very valuable for our audience today. Thank you. Kingsley, welcome back. How are we doing
Yeah,
today?
yeah. Good evening, Sonny. It's a pleasure to see everyone here. And once again, it's family time, like you said. My name is Kingsley Kobayashi. I'm a serial entrepreneur. I invest in both blockchain and traditional projects. My first startup was in 1993, and that was Hurricanes International. It's still around today. We invest in areas of renewable energy, commercial real estate, and things that impact on humanity and the next generation, things that will be coming up: AI, healthcare, telemedicine, just to mention a few. So I'm glad to be here to talk about startups and the role of advisors and what they do to help those startups become something big in future.
Thank you, Kingsley, and we are always very delighted to have you on our show to listen to your insights, and welcome back. Thank you so much. Wow,
Very glad
I'm
to be
so
here.
happy. Yeah, I'm so happy to see like all the family reunion happening with today. I think I'm surprised in a nicer way to see everybody. Harsh and Raghu just joined. So yeah, I'm really excited as well. So let's just have a round of introduction as well of other speakers who've joined us. Dr. Marin, who has joined us from Italy, if I hear that correctly.
Correct. Hello to everybody. So indeed, I'm Singapore-based. Currently doing my first travel outside Singapore since a long time in Europe. So Italy and Germany mainly. I'm happy to be
Right.
here on the show and share my own experience in respect to advisory boards. I'm representing Schweizer World. We are a family office, venture engine, and venture capital arm of Schweizer. Schweizer, and we've been joking about that a lot in VCTV shows, is called a dinosaur. Why that? Because we are as old as Siemens, approximately. We are older than Bosch. You might know these names, and we are going to turn 172 years old. So we've seen a couple of things and built many companies during that long time. It's a sixth-generation family business, listed at the Frankfurt and Stuttgart Stock Exchange. So I'm running the show of the family office. We are investing into digital ecosystems in Southeast Asia. I'm sitting on 10 of our investments, which amount to 34 as an advisor. I'm also sitting on an advisory board of a German insurance, that's an MNC, active in 150 countries. So today I would like to share the value of advisors for startups in various stages, the do's and the don'ts, and also the differences to governance boards, for instance. So it's really dear for me to share my experience because an advisory board needs to be there to deliver value and not to control or whatsoever.
Absolutely. Absolutely, Dr. Marin. I totally agree. And I think the role of the advisors have evolved as we speak. And yeah, we would like to know what's the trend and what kind of role they play, especially during these times. Thank you so much for that intro, and hope everything is okay in terms of the pandemic. COVID is under control, because I remember Italy when it started, like in 2020, was the first country to have very badly affected. I hope everything is all good now.
Yeah, it looks pretty fine. What didn't change is that internet is really an issue, honestly speaking. So if you lose my video, don't be worried. I'll just relog to the platform.
Okay. Okay, got it. Noted. Awesome. Thank you. Tushar, let's have your intro.
Thank you, Sunny. I am Tushar Kansal. My company is Consultancy Ventures. We have close relationships with almost 350 global investors, and we guide venture capital and angel investments into startups. I'm personally an investor in 4 companies. I have handled the private equity assignments at Deloitte and Touche, been part of the team at Brand Capital, which is Times of India's venture arm, and headed the treasury with the Russian telecom company Sistema's India unit, raised almost $2.5 billion for the company in 3 years, and was CFO of a Guggenheim Partners owned company called Distribution Logistics. I'm a mentor and judge at 4 of the top 5 educational institutions in India: the IIT Delhi, IIT Mumbai, IIT Chennai, and IIT Kharagpur. I'm also a venture advisor with Loyal VC, the INSEAD-led Canadian VC fund, having a core portfolio of over 160 investments in more than 35 countries. Over the years, I've arranged funding for startups and growth stage companies in diverse sectors like education, technology, fintech, consumer, B2C, B2B, D2C, and so on. Happy to be here and sharing my views on the role of advisors in the startup world.
Thank you, Tushar, and
Thank you.
always glad to have you on our shows and listen to your insights. Thank you so much. Next, I have Harsh. Hi, Harsh. Welcome back. How are you?
Sony, glad to be back, and after so many days, good to see you again after a long time. So just
Same
a
here.
short and my my pleasure. Just a short intro about myself. I'm Harshetia, venture partner with our ventures, founder of Startup Hackers. Essentially, we help startups with fundraising, whether it be equity or whether it be debt. Helping them with strategic guidance to help them grow their business, as well as help them with growth marketing. Essentially, helping them with setting up their sales funnels, marketing automation, email automation, and essentially creating a predictable revenue growth for a lot of businesses. That is primarily what we do. as our ventures and as as startup hackers. Thank you so much.
Thank you, Harsh, and welcome back again. Always happy to hear your insights. Very creative. Thank you. Next, I have Raghu. Hi, Raghu. I'm very happy that you've joined us finally today. I know that our times don't match. You are in the US and I'm in Singapore, but I'm really happy that you finally joined us today. How are you?
I'm great, Sunny, and thanks to VCTV, and see a lot of familiar faces here. And since there are so many, I'll keep my introduction very short. I'm a serial entrepreneur, a startup advisor, and early stage advisor, and a strategic advisor from Princeton, New Jersey. I work with companies in biotech, cybersecurity, clean tech areas primarily, and I've also been an advisor through Vistage for about 45 companies, all in middle stage, early middle stage companies, helping them with going from survivability to scale up. So look forward to the discussion today.
Absolutely, absolutely. And I also would like to know what's happening with your company.
Yeah, I will give you an update later. Yes, Split Byte, which is in the space we are talking about, is just about to close on a funding. So we are hoping to do that within the next 2 weeks. So.
Congratulations. Pre-congratulate. I mean, yes, I can always congratulate you after also. But yes, we'd like to know more about that as well. Thank you. And Raghu, welcome to VCTV. Okay. Last but not least, we have Vandana, who's just joined us back as her computer crashed and she's back now. Hi, Vandana, can you hear me?
Yeah, sorry, Sunny. Yeah, I can hear you.
Okay, let's start with your introduction.
Am I
I have
audible
something to
and
announce. I think your connection is a little
hi?
sort
Am
of
I
laggy.
audible and visible?
Yes, yes, you're visible. Please go ahead.
Yeah, I think there's a lag today for some reason. I'm not sure why. Yeah. So thank you first of all for Sunny having me here. It's a great pleasure to be on your show. And whenever I'm on your show, it's full house. So happy to see the full house. Coming to an introduction about myself, I have investments in Singapore and Jakarta, family offices and angel investors in Jakarta, Indonesia, helping startups from a diverse background. And after 15 years of staying there, I came back to India. That is when Convanto was found. And today, Convanto is one of the most well known boutique investment banks led by a female founder. I'm also a venture advisor with Loyal VC and a partner with GST Venture Studios. I've also been selected as one of the top 10 women leaders in Wealth Management 2021. My brand Convanto comes under the top 10 women entrepreneur brands. My expert opinion is sought in leading business news channels like VCTV, Business World, and I've participated in 160 plus talks all over the world. I have an investor connects of 300 plus globally investor connects. We are sector agnostic and typically we do a $1 million to $25 million. And thank you once again for having me here.
Thank you, Vandana, for being here. I have to make a short announcement. So Vandana's, would you say, yeah, Vandana's company Convanto is offering a special discount for the VCTV viewers, a 10% discount for documentation fees and 1 hour free consultation for those who sign up on the show today. So this is for grabs, guys. I mean, the viewer, this is for grabs. So Vandana is offering her advisory services for those who are going to sign up. And the link is here below and it's on the post as well. So it's for grabs.
Thank you, Sunny.
Okay, awesome. All right. Talking about advisors, let's just start with the basics first. I would like to know who is an advisor, who can be an advisor, what kind of experience or knowledge they carry that they fit into that role. Um, maybe with Dr. Tobias.
Yeah, definitely. I think it's an excellent question. Um, I don't think there's like a none plus ultra sort of answer to that. I think it really depends on what you're looking for, right? But I think for me, it is really important that advisors are aligned with what the company is doing, right? So that you actually have someone you bring on as advisor because he or she can solve or help you solve a specific challenge, right? Which could be from a technical perspective, which could be from a business perspective, or from entering a new market. So you kind of have to make sure that first of all, advisors are long-term aligned with your business and not there because they want to, grab a little bit of equity or grab a little bit of compensation, whatever that might be, or even if there's a compensation, and then basically run away. You want to have someone who is committed and really believes in what you're doing, right, and sort of really supports your business from that perspective, and then can add tremendous value on that area you want to have in sort of joining your business, right? So especially if you're a startup and if you're new and if you're small, you always lack a little bit of credibility, right? It's always challenging, especially in a in a sales cycle, or from that perspective. If you want to reach out to a bigger corporate, how would they trust you, right? How would they believe in what you're doing? But obviously, if you can show them that you have a strong advisory panel, or even if some of them has the connections to can make the introduction, that obviously is very, very helpful, right? So I don't think any profile technically could be an advisor, right? As long as it adds specific value to your business, and it's not just there because someone wants to, make your LinkedIn profile a little bit nicer, but actually adds value and is aligned with you, and likes your story and likes where you're coming from. And I think then it's about like organizing an advisory board, which is very broad in terms of how you would need it, right? So you probably have an advisor who's more on the investment side, maybe an advisor more on the technical side, maybe an advisor more on the go-to-market side, right? And these advisors should be relatively high-level people. I mean, if you can get them, that'll be great, obviously, who have good connection to the industry and also that expertise they can offer to you as a startup. And then it's important that they will support you on a long-term basis, with answering your questions, jumping on calls, having ad hoc conversations, and then it depends on negotiating the best way of getting them engaged on whatever way possible, right? It's a very high-level answer, but I think it's a good way to start, and then obviously you can jump into more like areas when an advisor would be necessary or how they would be engaged.
Perfect. I think that's a great start, Tobias. I mean, really, the way you put it, like somebody to sort out your LinkedIn. I mean, that's a great start. I mean, let's just hear from others as well, what they've got to say, and we can conclude and summarize who exactly an advisor is, and what are his duties and roles and responsibilities when he joins our board. Next, I'd like to go with Dr. Myrain with this question.
Yeah, it's a very important question actually. So let me explore a little bit the difference between governance boards and advisory boards or advisors. Let's start with advisors. What we often see in the startup space is you have advisors for credibility. That's a good thing. And then there are a lot of family and friends. They are kind of there, have a good time, but they don't really have a lot of KPIs. So down the road, there might be dissatisfaction because you're not getting what you were expecting. So I recommend to structure advisory boards. Secondly, we need to understand the difference between a governance board and an advisory board. Governance boards actually are there to make decisions and help drive the company, while advisory boards are purely think tanks that help you explore ideas, but they are not there actually to help you run your business. They are there to give you input, to open new doors to their network, if it makes sense, and to do a structured process. So looking at advisory boards, I think it's important to think about an advisory board and not only as individual expert advisors who jump in, jump off, are there for a certain time, might be time consuming, might be also kind of not motivating too much your organization, because any advisor that jumps on in a not so orderly manner needs to be entertained with a lot of data. They ask questions, the questions might be asked again and again and again. So these are the don't do's. So I suggest and propose get yourself into a structured process for an advisory board. That generally takes 2 to 3 months onboarding sessions, and there should be a set of advisors on advisory board. Let me come to that a little bit later in our today's session. How I feel like setting up advisory boards can be very valuable for startups.
Absolutely, absolutely. I totally agree. Thank you, Dr. Marin, for that. Next, Dr. Kingsley, let's just hear from you.
Yes, thank you, Sonny. Advisory board is very, very, very important. To a lot of people, being on the advisory board of a company, for them is an achievement. It's not actually an achievement, it's a responsibility. You have to know the difference between an achievement and a responsibility. You have just taken up a responsibility to make sure that that startup company succeed, that company that you are an advisor to, you add value to what they are doing. But most cases, I will take an example from where I live in Tokyo, Japan. They look for advisors who are prominent people on TV. They are models. They are this, but they necessarily don't have what it takes to actually add value to the company, except just they have the face. They are TV models. They are this and that. No, that is not what you need for advisory. You need somebody that is versatile in your field in whatever project you are doing. The person has to be versatile there. He has to have the company or the project at heart. He has to understand the project and help you to add value to it, help you to uh, change things where they need to be changed, ready to work with you all the ways until you succeed. I think the advisory board is has to be versatile. Like for example, why most Japanese companies don't go on IPO or don't succeed. I'm thinking from a Japanese point of view, is that they have advisory board that is streamlined only to local people. You have an advisory board that is all Japanese. You have an advisory board that is all Indian or all. So you need an advisory board that is versatile. You have people from different part of the world. You have people from different fields that have knowledge about your project. So you have different input from different people. This is what I think an advisory board should consist of.
Right, totally agree. A diverse set of people. Thank you so much, Kingsley, for sharing your views on that. Let's
Thank
hear
you.
from
Pleasure.
Tushar. My pleasure too. Let's hear from Tushar what he's got to say about this person.
Thank you, Sunny. I feel that companies, when they are growing, and especially if they are early stage or little bit growth stage, they require a lot of support and hand-holding. And while one can always give support in terms of narrating how others are doing it, or how some previous company is doing it in terms of management principles and strategy, but a lot of the time the startups, they need business connects. They need to be referred to the right business, and they need capital. And apart from capital and business, they need relationships across the ecosystem. And more than that, they need to create an ecosystem around them. And that is why we have communities inside startups, and startups, they want to be a part of a lot of activities, including seminars and webinars, and so on and so forth. So to me, an advisor is someone, I have been an advisor with almost 10 companies in the last 3 years. And I pick and choose my companies because I will only accept an offer if I feel I can add value to that company. And adding value would, of course, mean getting access to funding, but also getting them business, and putting them through Indian and international relationships from where they can form a circle of trust and get business. And that is what I feel an advisor can do in support of the startups where he's working for. Thank you.
Absolutely, absolutely. Thank you so much, Tushar, for sharing those. Next, I have Harsh.
Yeah, hi. So definitely, I would kind of compartmentalize them into three kind of advisors, right? One would be the network advisors, who have the relevant network for the right industry, and they can connect you with the right people, right? So if you have definitely senior people like Raghu and Marin on the panel who worked for 20, 30 years, and they know the right kind of people across whom you can reach out to, right? So they can help us reach out to the right people and kind of expand the network of the founder, because it takes an army to kind of create a successful startup, right? So that is where you have these kind of advisors who can connect us with the right networks, which are required to expand the business. So that would be one category. One category would be strategic advisors. How I would differentiate them from network advisors would be that they help you think through multiple different perspectives at the same time, and so that you can then kind of create your own. The founder can then kind of create your own process and approach, right? So if suppose the founder is contemplating a specific business choice or a business decision, right, then you can have these kind of strategic advisors who can help them create multiple situations, kind of how game theory works, right? You create multiple situations, multiple simulations with multiple outcomes, present those options before the founder, and then collectively deliberate on that. So that is a consultative kind of a strategic kind of an advisor who can help you in those regards. Then you have the operative advisors who essentially directly have specific skill sets who can help you grow the business, right? So I typically come into that category with the specific skill set which I have in terms of growth and fundraising. We work towards specific activities where we help in the marketing side of it, or the sales side of it, or the fundraising side of it. That's where we typically come in, where we help in specific action for the specific startups which we like to work with. So essentially, a startup needs advisors in all the segments to ensure that they can move forward, because the just the founder by himself, a lot of the times they have this kind of a mentality that we can do everything, but it's truly not possible. And that's why you need a very strong diverse set of advisors with different set of skill sets, sometimes even contradictory skill sets as well, to kind of present the alternative perspective which you kind of haven't thought across till date, right? Because unless you can handle different kind of perspectives and different challenges, and you cannot if you are unable to face that at the company level, it's going to be far more tougher at the customer level. So you need those different perspectives to kind of ensure that your idea, your concept, your execution is withstanding the rigor of those kind of discussions. So that's why a good balance of all these three is extremely helpful.
Yeah, good to know the different types of advisors to be there in your company. My next question for the second round is something which is a follow up question to that. But just let's hear from Raghu about his insights about this advisory. Sorry, I have Vandana coming next, but Raghu, what's your thoughts about this person?
Sure. I think it's advisory board. It's more like a sounding board as well as assist on different aspects. Usually in my advisory companies, I try to help have two boards. One is a strategic board, and other one is the technical or scientific board. Since I'm working mostly with technology companies, I think it's a kind of good high level breakout. I feel that the advisors need to help the company know what they don't know. I mean, the founding team. So it's about going from in my Vistage group, we used to call it going from unconscious incompetence, which means you don't know what you don't know, to to conscious incompetence. That is, at least you don't know what the holes are, right, and what the potholes, and how to navigate. And then ultimately you want to go to conscious competence, right? That's everything is in place. You have the right SOP, the right people in the right seats on the bus. So that's kind of what the advisory board. It's an extension of the team which helps to navigate through the initial kind of thorny part of the journey. So.
Right. Totally agree. Thank you for those insights, Raghu. Vanjana, let's just hear it from you as well.
Yeah, so Sunny, in simple terms, a startup advisor is a professional with relevant industry or business expertise who provides industry or subject matter advice, mentoring as well, networking connections to a founder of a startup or an entrepreneur. Now, the idea is that while you may have the idea and technical skills to create a brilliant product, you will probably not have the range of experience, skills, and connections to capitalize it on it to the maximum. Now, there is where the advisors, step in. This is where the advisors might step in. They bring in with them all these skills which one can only acquire over time and with experience to guide or to mentor you in the practical sense. And an advisor is also there to maximize the project's chances of success. Sometimes that means helping a company change a course when it's heading down an entrepreneurial dead end, and helping a company's owner to see why they need to steer their ship in a different direction is an essential part of an advisor's role. An advisor needs to be exceptional at helping people figure out what doesn't work. Like realistic feedback is crucial when you're a founder. And also, an advisor with the right expertise can help you achieve your goals more quickly than you have plans. That's because you get to leverage the experience of someone who knows how to build a business. And sometimes too often entrepreneurs fall into the trap of chasing big names for advisors and mentors, and I feel that's not the right strategy. First of all, because those are also some of the busiest people in the world, and even if they wanted to, they probably wouldn't be able to dedicate enough time to you. Instead, try to find people who have the domain expertise in whatever it is that you are trying to do. For example, if you are trying to do an e-commerce startup, find someone who has an experience scaling an e-commerce companies. A person like that will be much more valuable to you than some big names that has never done anything in e-commerce. So I think this is what I would like to convey. And this is what Convanto also does. Convanto helps company with a lot of advisory services, which helps them grow, scale up. Not only that, get them the right kind of partners in the industry.
Sure. Great. Thank you, Vandana, for those insights as well. That takes me very smoothly to my next question. Are they employees of the startups? Are these advisors or the advisory board that we have within the companies? Are they employees in the sense, are they, do they get paid by the founders? Or they are sort of consultants, external consultants, there are multiple sort of hats in different companies, or are they freelancers? What kind of um, employment structure do they have, or relationship do they have with the startups? Tobias, let's just start with you.
Yep, thank you so much. Another very interesting question, and of course it differs, right? But like what I really want to emphasize here is, and I think Madonna made the point before, is that you need to have someone on board who really believes in what you're doing, right? It doesn't matter if he has the best name in the industry or has like whatever title, because that's a person who potentially is not going to help you, right? I mean, you see looks good on your slide deck, but besides that, it's challenging from a commitment perspective. Now, how do you engage them is the next question, right? Once you have those people, and obviously there are different ways. Now, you could pay them, right? You could give them equity, or you could let them work on a pro bono freelancer basis. What I think works best for an advisor panel is essentially if you give them a very small participation on the equity side, right? You can use a fast agreement, which is a pretty industry standard advisor agreement from, let's say, 0.5 to 1% or in that range for your key advisors, because then they have the aligned incentive, in my opinion, because they are aligned on the long-term growth of the business and not looking to get like a little additional salary, because if they're not doing anything, they risk their portion might not work out, right? So even if they put in some work, they are going to get rewarded down the future, and that's the people you want to have, because they are going to stay with you even if things go a bit downside potentially, or take slower, because they know that they are essentially going to get something of a bigger portion, right? And if that company blows up and becomes a unicorn, then the 0.5% and the percent matters, right? Even if it's not a unicorn, obviously it can still be very significant. So I wouldn't necessarily, they're not employees, because they're not operationally going to support you and they're going to sit with you and support you in an operational perspective. They're more high level strategic, but long-term oriented and aligned with the vision to help you drive that value through their personal network and connections. And that's why I think it's so key to have someone who actually believes in your vision, because that's the person who will end up doing something and not just being on your deck or on your LinkedIn just because he wants to get some additional experience or exposure. Or big corporates, they sometimes just join advisory boards just to get the additional innovative techie sort of perspective, but you'd rather have someone who actually adds value.
Toby, that's a very good point. Equity. When somebody is giving a part of your company away to an advisor, so what kind of expectations in terms of goals, timings? Is it like something that is something has to be structured for that person? And just want to be
Yeah.
sure that when somebody, if I'm giving equity, if I'm giving a piece of my company to you, then I expect obviously results, right?
Yeah, so I think there's two ways of looking at it, right? So first of all, I wouldn't necessarily give the person immediately equity, right? I mean, you want to have and build a relationship with that person, and once you feel like it's the right partner, then you have an agreement which typically has like a cliff or has a vesting period over a certain amount of time. So you don't give them like 1% equity upfront, right? Because then the whole point is like basically not working, right? Because you want to give them, over a year or like 1.5 years with a 3 months cliff. So you want to make sure that they actually join, and then it gets vested through the effort, which is kind of like sweat equity in a sense, right? If you look at it, and I think from an engagement perspective, I think it definitely needs to be aligned, right? I mean, how many calls do you have? How much engagement do you expect? Of course, not from a minute to minute perspective, but like at least high level that no one is surprised in the end and has a very different expectation, because it happens sometimes, right? I mean, an advisor and an employee, if they have different expectations, and then it clashes, then obviously it's very counterproductive to the whole growth. So I think it needs to be outlined in that contract to an extent, so that every expectations are clear and aligned with each other. And then I think the growth journey is sort of working much more smoothly with that sort of alignment. But I'm happy to hear other thoughts as well if someone has different experiences.
Great points. Thank you, Tobias. I'm going to ask Dr. Maring next.
Yeah, may I jump in? Tobias mentioned very important topics. So to your question, Sunny, first of all, advisors are not employees. They are not acting on behalf of the company. They do not have the authority to do so, and they shouldn't do it. Sometimes this is difficult not to go into that trap, but that's important to keep separate. The executives are there to make the decisions, while advisors don't. So that's one level. The other one is being paid. Professional advisory boards, they require remuneration because there's a deliverable uh, to the startup. And then you can agree with advisors. Do you want to pay them in cash? Do you want them to pay with share options, or a combination of both? That's the underlying set of how it is paid. So I think it's very important actually to do a proper onboarding. Many startups, they just, from experience, we just don't know what do we exactly need as an advisor. We have ideas. We might need a strategic advisor. We might want to have somebody who's opening a network. We might need to have some expertise, so an expert advisor down the road. So a typical onboarding journey would look like that. First of all, you really need to focus on assessing the needs of the startups. This can be done structured. We are doing that actually via a web portal. So we kind of define the status quo. From there, we jointly define the KPIs. So what KPIs shall the advisory board fulfill, and how is the advisory board being measured down the road according to the needs of the startup? This is a lot about expectation management. It might sound a little bit kind of academic, but it's really important. And you can set 2 or 3 KPIs for an advisory board too. But before that, you need to set the KPIs, so the needs of the startup for the advisors. From there, we would want to set up a charter. Tobias had mentioned that a little bit already. The charter is actually typically a simple way. How do we want to work together in all kinds of aspects? And from there, we would move on to staffing the advisory board. So in generally, the startup should select a chair first. The chair is actually the person who is going to manage the advisory board, which generally has several members. And from there, selecting the advisors, linked again to the needs of the startup. You can select then the expertise. My recommendation to all startups would be also look at the relevance. Somebody who has visited Italy 20 years ago might know how Italy has been 20 years ago, but this experience might not be valuable in today's world anymore. So, beside expertise, look at the relevance, look at if, and that's what we do, if the advisors who jump on an advisory board or who engage with an advisory board, do they have any certification? So, do they have a tool set? How professional advisory boards work? Because that's what we are looking for. It needs to be professionally managed, and uh, and then we would enter into an engagement. So typically, an advisory board would look like that. It's a team of six, three representatives from the startup, normally the CEO, two additional executives, and then one chair, as I mentioned before, a chair advisor, and at least two more expert advisors on specific topics that are selected. So it's a group of six. After that onboarding period, we would run into a go live. And my recommendation actually is to set it up on a very regular basis. Typically, we are having one half day meeting a month, which is predefined. Everybody has to join because we don't want to have advisors who jump in, jump out, jump in, jump out. That's not a good setup. And it's also required that the agenda is set up. That's the role of the chair. The chair will then talk to the CEO. Okay, what topics are we going to discuss in the next advisory board meeting? We're going to prep it. We are going to share pre-reads, pre-information for all advisors to prepare them and to give them the opportunity actually to think about ideas and solutions, because we want to talk solution. We don't want to spend half a day just on exchanging information. So that's typically what we believe works very well. And it needs to be paid.
Thank you, Dr. Maren. I think this is a very structured approach coming from a family office. Talking about early stage startups, Tushar, do you think it's feasible for a startup or early stage or a Series A startup to have a board, advisory board with a chair that talks to the CEO and a group of experts? So, what's your thoughts on this?
So, I feel that, the engagement has to be deep. Now, whether that engagement is deep enough with a commercial arrangement, which is X, Y, or Z, I have seen all kinds of arrangements. So, there is a consulting retainer kind of arrangement. Then we have a equity plus retainer arrangement. And then we have pure equity, only equity arrangement as well. It really depends. Whether you want to take help from the mentor or advisor in the form of a project, or you want them longer with engaged with your company, till the entire business plays out. And what I've seen with the advisors who I respect in the market is that the companies always want a longer arrangement, so the equity part is always there. And
Right.
how much equity part would be there actually really depends also on the current valuation of the company. So series A would mean that probably the equity which will be given to the advisor would be less than 5 or 4%. And if it is earlier than series A, then probably uh, 5 to 8%, 6%. And if it is beyond series A, then of course lesser than that. So so there is no fixed formula for this arrangement. But having said that, it really depends what value the advisor is bringing on the table, and also whether the advisor is helping in the operational part of the business, or he's helping by way of bringing in more business to the company, in which case he can also take a commission on the business he's bringing. So that option is also there as well.
Yeah, so there are different ways. If it's only equity, so do you think the payouts are done only at a certain later stage?
Yeah, there can be if the advisor is getting equity, then he has an option to sell the equity in the future rounds when the liquidity events are happening. But the good advisors, if they are part of a good company, they would like to hold on to their equity for longer. So
Right.
because they know that this company will really go the whole way in the next 4 to 5 years and so on.
Thank you so much, Tushar. Kingsley, may I ask you next, please?
Yes, thank you very much, Sami. It's been well covered by Dr. Maureen, Tobias, and Tush. What is the major role of an advisor? A lot of people misunderstand what an advisor is. They misunderstand for a partial investor, a partial governing board, a partial employee, or member of the team. I don't think this, it is very specific. Your role is to advise on a specific subject or way that you can. If you are to introduce them to a new market, that is what you are advising on. Then you have a different advisor on the technical aspect. Then you have an advisor on the team. You have which is the HR. So you have an advisor on different parts of the project who will now come together and put heads together. Okay, this is the chair. This is what I think we should do. Like the Barry said, there should be a specific date that you actually talk about the solutions for this company. You must be willing to work with the company, but you are not an employee. And there's a difference between a mentor, there's a difference between an investor, a founder, a governing board. But most startups put all this together on one person and say, okay, you're going to help me respond, you're going to introduce me to people, you're going to help me with the tech. It doesn't work that way. You have to take somebody who is specifically for a particular project. This is what he does, and then you negotiate. Nobody deserves anything. You get what you negotiate. You don't get what you deserve. And for a startup, I believe it's mostly between 0.25% to 1% of equity is enough. Except you are an angel investor, then you need more. But if you are just an advisor, I do believe that you don't need too much of the equity. If you do be paid, yes, you will be paid out of that, but you are just a helper to make them succeed. You give them advice. Okay, this thing is going wrong. Why don't you give rewards to these people? Why don't you do this? It's just to set them in the right path to success. Your job is not to make decisions for them. Yes, if they have bad decisions, you can recommend or advise that, oh, I think your decision on this is bad. Why don't you look at it like this? Most advisors turn out to be how do I call it? Dictators. They turn to be, you have to do it this way or I will leave. No, that is not your job. Your job is to advise them on how to get better, on how to succeed in their business. And yes, you get paid what you negotiate, and some are willing to go all the way, some are willing to go halfway. Whichever way you agree on, just make sure you give the right advice and give the right support to the company you are an advisor.
Thank you so much. Thank you so much, Tushar and Kingsley, for sharing the percentage of equity. There's a little bit of difference, 1% to 6%. Harsh, what's your thoughts about that?
Yeah, so normally at the earlier stages, equity is more suitable because most startups are anyways strapped for cash, right? However, the percentage of equity in my experience typically ranges from 0.5% on the lower side to 2% on the higher side. It's very rarely more than that, because more often than not, these advisors are more like they have with strategic connections, right? It's not like they're active participants to the company. That's why it very rarely goes beyond 2%. And if it is Series A or Series B or beyond stage, it's definitely 0.5% or lesser than that. So regarding the number, that's the case. And compensation mostly, as I mentioned, is going to be in equity terms. You can kind of vest it over the next 2 years, which is typical for an advisor. A co-founder vesting is normally for 4 to 5 years. Employee vesting is for 3 to 4 years. Advisory vesting typically lasts for around 2 years. So that is roughly the area which I look at. And you can come up with multiple structures over there. A cliff is probably not a good idea, because a cliff sometimes can kind of disincentivize the founders as well, right? What will happen is, if you put, say, a cliff of the first year, you take the advisory services for the 10 months, 11 months, and at the end of 11 months, you say, I no longer need your advisory services, right? So So that kind of puts the advisor on the back foot, as in after doing 10, 11 months of advising, and you suddenly just kick me out of the company, and I don't get anything out of that. So that is why it's extremely important to kind of vest it on a monthly basis. So that way it's a win-win for everyone into the situation.
So there should be a formal sort of contractual agreement signed between the advisor and the founder, right?
Yeah, definitely. So in India, they call it the advisory SOPs, just like you have employee ESOPs, right? For employee SOPs, same way you have it for advisors as well. They call it the advisory SOPs. I'm sure there would be similar structures across the world as well, where you can put those, the clauses right from the beginning. You can put it on a monthly vesting system, and as I mentioned, 0.5 to 2%. You put it right from the beginning, and it's very difficult to compensate them with cash because more often than not, these advisors may have some other full-time job, right? That will not
Right.
only create a direct conflict with that job, also the financial component is going to be very high. And these kind of the senior leaders who are there, who are already making like millions of dollars in salary, they are not that interested in getting a few $1,000s in cash. So that's where advisory equity makes more sense, because they are looking for the longer term upside rather than a shorter term cash based system.
Makes sense. Thank you so much, Raghu. Your turn,
Yeah, I
please.
agree with Tushar on the size of the incentive. It's usually somewhere between 0.25% to 1%. And I mean, obviously, if we are looking at unicorn type companies, and in addition to that, you can actually have, we have advisory agreements at 3 tiers, which have different levels of, equity. But some of them you can give a retainer if they're operationally involved, as well as a success fee, especially if they're helping on raising capital or bringing in business, from a sales perspective. So I think the advisors, it depends on the company. If they have it depends on how you round out the team, because somebody doesn't have a full time, let's say, business on the business development side. Then you can bring in an advisor who can be both. Be part of the advisory board as well as for temporarily part of the execution team. So like a fractional, whatever it is, fractional marketing officer or something like that. So those are all possible, but it needs to have very clear contractual things. The advisory agreement will have a certain responsibility. Execution agreement will be a separate one, like a consulting agreement. So each will have its own, objectives and goals, as well as milestones, if it's success based. So it's very clear. Otherwise, the more ambiguous it is, the more difficult to, for both parties. Just anything measurable makes it a lot easier. So
Absolutely. Absolutely. Totally agree. I think everybody's sort of emphasized on signing a contract and also pay. I mean, it could be in terms of equity or retainer or a salary, but there has to be a pay. Vandana, I've lost you. I think I've lost her. I think we are heading towards the closure of the show, so do not have much time. Until Vandana joins in, can we quickly take a quick round of closing remarks with, I think, whatever points you wanted to mention in the show but couldn't, you can just sort of probably put it together as a closing remark, and starting with Dr. Marain.
Yeah, happy to share. It's been a pleasure to be on the show once more. So I think the most important topic is to start the journey right. So please, all startups out there, spend sufficient time to assess your real advisor needs. Do that right. We are very happy to help you doing so, because from there you can talk about expectations, about KPIs, and you'll get the most value out of an advisory board experience for the shares or for the money you're willing to chip in.
Oh, great. Thank you, Dr. Marain. Where can startups find you if they have to reach out to you?
You'll find me via our webpage and certainly on LinkedIn. Please reach out to me, and I'm very happy to run the assessment I've been talking with you individually, that you get a real flavor on how we are approaching an advisory board mandate, if it makes sense. And it has to make sense for both sides. And there's also the personal level, because you need to get along It's a very close relationship behind the contractual topics we've been talking about today, which are charter. The charter is what are you doing for the startup and what does the startup do for the advisors, and then you need to have the contracts in place. We've heard that before.
Thank you so much, Dr. Marin. Vandana, are you back? Because I see you back and forth, like, offline, online. Are you there? Okay. Tobias, your closing remarks, please.
Yep, definitely. So also thanks for having me on the show. It was a pleasure meeting all of you and talking about advisors. I mean, typically, since we are quite early stage investor, right, I cannot emphasize enough that you find someone who's closely aligned with your vision, because none of you will see immediate monetary upside. Right? It takes a little bit of time, but I think it's just important to figure out when advisor makes sense, right? And especially like an interesting example I like to give is, for example, when you try to go into a different market, right? Rather than having a full team deployed over there, it's maybe interesting to figure out who could be a good advisor for that market, who can sort of act similar to maybe a brand ambassador, right? Who can make already some initial introductions, which saves you already a bit of money as well, and that gives you that presence and dominance in the market, because you have someone who speaks up for you, who's probably better than connected than you are. So like, it's about figuring out when advisor really makes sense, rather than just like filling up your advisory board with people who have a good name, because in the end, everybody of them should have a use case to your business to help you grow on various angles. You have a need of growing, right? And it's also important that you get a well diversified advisory board, and not just having like 4 people who are good at fundraising but none are good on the technical side. Right? Just because they have a good name, it might be good to limit yourself to one of these 4, and then get someone else who's better on the other side to have a well balanced, who can really give you a very good upside. And then it's about, as Dr. Maureen said before, to really bring something to paper, have a charter, or even something similar when if you're too early stage, that everybody's aligned and no one is surprised if someone is not happy with the current development, right? And everybody, of course, needs to be to some extent rewarded. Equity, we talked about cash, we talked about different initiatives, which of course needs to be discussed and negotiated with the different parties aligned. And I think if that all is being thought through, then I think an advisory board can add tremendous value to an early stage startup, also to later stage. But it should not be taken, as just a small side gig. It's something which is crucial and in my opinion, very valuable if done right.
Great, absolutely great points. Tobias, I'd like to ask, because obviously you run a fund. So what kind of portfolio of startups you funded, and what are you looking to fund in future? And where can these people find you?
Absolutely. So we look at all early stage companies from pre-seed up to pre-series A. We look at very globally. So we already have companies across 6 continents. We don't do anything hardware related, so we're very much on the asset light side of things. We look at blockchain companies, emerging tech companies, who can really solve a problem, right? So we always really sort of long-term aligned with them. We hope to follow on multiple rounds if, of course, the company is aligned with us and the performance is correct. And yeah, we typically work very hands-on with our companies, typically on a weekly sort of basis to help them scale on very different angles. And I'm always reachable on LinkedIn, try to be very responsive. And of course, on the website of Blockchain Founders Fund, or via email if someone can reach me as well.
Thank you so much.
So,
thank you.
Thank you.
Tushar?
Yeah, so I agree with Raghu there, on the need for a very close interactions and relationships with the companies where you are advising them, you are mentoring them. I actually know companies which Raghu is mentoring, and he's really doing a good job. And regarding myself, I can be reached on LinkedIn if you search my name, Tushar Kansal of Consultancy Ventures. Otherwise, my corporate website, consultancy.com, and email tk@consultancy.com. And thank you so much, Sunny. It was a very healthy discussion. And thanks to all of the panelists here. Thank you.
Thank you. Thank you, Tushar. Harsh, over to you, please.
So definitely, I would recommend a lot of startups to look at strong advisory boards and keep it as diverse as possible, because it's extremely important when you're creating the advisory boards to have you have differing set of opinion, sometimes even conflicting sets of opinion, because you need to ensure that your idea, your execution stands the veracity in the within the confines of the company before it goes out in the market, right? So do put a lot of thought, when you're setting up your advisory board. It's extremely important, and also you need to be able to reward them properly, because that is how you can get a solid advisory board. It's very difficult to do it by yourself, and you need a lot of help to kind of take you to the next level, and that's where the advisory boards come in. So if any startup needs help with me in any form, any way, shape, or form, in terms of fundraising, growing the companies, marketing, sales, anything of that sort, feel free to reach out to me. I'm available on LinkedIn at Harshetia. Looking forward to connect. Thank you so much.
Thank you, Harsh. Thank you. Vandana, are you back? She just said I can hear you, but she's frozen on me. Okay, Kingsley, your closing remarks, please.
Yes, thank you very much. It's been a pleasure being here today.
Am
I
I
have
audible?
learned a lot. I have learned a lot myself today, and I wish our listeners out there have learned a lot too. Uh, Advisory board is very important for a company to succeed, for a startup to succeed, but you have to look for people who can add value to your project, not just people who have the names or who are role models for people in different projects, but you need people who understand your project and are ready to work with you to make it succeed. Also, you also have to know what value can this person bring to you and know what you can offer to the project or the startup company. So the agreement part of it is actually left to the founder, the team, and the advisor. But what is important is that you should both agree on what you should bring to the table and have communication from time to time. What happened is that there's a break in communication because there's no setup time to have that communication every week or every month, and then people forget about it, and then you say, "Oh, this advisor is not good. I need a different advisor. I'm going to drop you under this contract, under that contract." No, lots of people can work with you and work with them to succeed. My name is Kingsley Kobayashi. You can reach me on LinkedIn on KingsleyKobayashi.com on Kobayashi Group, or just type it Kingsley Kobayashi and also through Latoke. Thank you very much, Sonny.
Thank you, Kingsley. Next, I have Raghu. Vandana, I'll come to you last because your connection is sort of breaking up. Raghu, let's just hear from you about your closing thoughts.
Sure. I can be reached on LinkedIn at Raghu S. Rao, and I look forward to talking to companies and helping them on their journey. I think the key thing with the advisory board is to utilize not only the company resources but also the advisors' resources, because many of them are busy. So I would strongly, especially technology companies, split the advisory board into strategic and technical separate advisory boards, because some of the things like in biotech, the technical people may not really want to discuss on the business side. They will be more focused on whatever it is, the IP side and all that. So that's especially high tech companies. I think it's good to divide them into strategic business advisory board and a technical advisory board. And also there is a third option, which is peer advisory boards. There are multiple ones, especially because startups, they may not have a lot of money. There are things like EO, Entrepreneurs Organization, Vistage, Tab, CEO Forum. Many of these are for the founder, operators to just join, like in a peer session setting. There's many incubators and accelerators also provide the same kind of ecosystem where you can take your issues to your peers, and then people discuss and learn from each other. I think that's another great option. Thank you. Really enjoyed the discussion.
Thank you, Raghu. Vandana, are you here? All right. I don't think she can hear us. Am I audible?
Yeah, you're audible.
Yes, yes, we can hear you fine.
Yes.
Yeah,
Looks
no problem.
like you need to enjoy the free advisory session with Vandana to be able to speak to her. So go for it.
Okay. All right. So, okay, probably she's gone now. All right, no worries. Thank you so much, all of you, for your time today. I think I learned a lot about this the role of an advisor in a company, be it a family office or a blockchain fund or a startup. So thank you for sharing your insights. It was an amazing session in terms of information sharing and networking as well. I hope to see you all again on another topic, another episode of VCTV. Like I say, a little VCTV family reunion. And take care of yourself from wherever you're dialing in from Italy, from Singapore, from India, from New York. Stay safe, stay connected, and we'll speak soon. And take care. Bye.
Bye bye.
Thank you very much.
Bye.
Bye bye.